$100 barrels, down to 80 started tanking. But as it got cheaper, more producers started cranking. Output kept raising, lower futures kept on trading. Same time, China bubble raising. We should've known it's trailing.
All right, ladies and gentlemen, I got your watch list coming in on March 9th, 2020, and the stock market is really about to go crazy tomorrow. We have the oil markets to blame. I don't know necessarily if we'll see a flash crash or a gap down tomorrow. However, one thing is probably going to be very certain, and that is oil is going to get wrecked. And I'm very, very impressed with some of you. You guys have reached out. You saw kind of these news develop. We saw updates on Friday with OPEC, but now this is leading to a very, very big problem, and this is macroeconomics. It's leading us to a few other plays to be looking at. So we are in a very, very interesting state. So I want to talk about that, what I'm looking at, how we're going to even manage playing those TLTs that we're holding, and what to keep your eye out for tomorrow. It's going to be very important. So got some keys for you. I got the plays we made on Friday, and then some other plays I'm going to be looking at tomorrow, how we're going to play the oil, and kind of the forecast I have for that. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/thestockmarket. Opening bell to closing bell. You could watch the news live. You could watch the plays live. You could ask your questions live. All we ask is you're positive and respectful. It is definitely a place to be, and especially if you got those TLTs, we are still holding that position. So how we plan to manage that, I'm going to be going over all of that stuff live. If you didn't see the video on that recap and what we did, posted it yesterday, so check that out. I think that's pretty much it. Oh, and the most important thing you need to do, post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes? What are you in? What are you holding? What are you looking for? How do you plan to play oil? Anything. Post that there below. We got to source that information. And shout out to all the people posting that and people keeping it positive and respectful in chat. Thank you, thank you, thank you. I love you.
Chat is so grown up. Oh my gosh.
But let's talk about these keys. This oil situation is awful. This now could be worse than the coronavirus itself. It is going to cause a race to the bottom, and watch the impact on currencies. So we have, thankfully, we have a very recent historical example. This is pretty much going to reflect what happened in 2014 with oil. This is what we saw, and it is connected to a lot of stuff. It's connected to bonds, and this is a very, very interesting macro situation. Right off the bat, it will affect the dollar. Oil gets cheaper, the dollar gets stronger. Oil is traded in dollars. But beyond that, what is happening now? So why is this going to affect markets? And also, as a note, I'm recording this video before the futures are opening. So by the time futures open, we're going to see some people are pointing down at 500 points down for the futures in the U.S. markets. However, some people are saying oil is going to open up at $30, which is insanity. We were already at a 4 handle. I said computers will go crazy if we go below 40, but now there is a lot of activity in the market. So to help you guys understand it, this is why it has such a big impact. Essentially now, China has caused a huge demand glut for oil, meaning China buys a lot of oil. Their factories are shutting down because of the virus and all this stuff. Even other countries now in Europe, that is taking away from some of the demand. So what OPEC, all these oil producing countries, Saudi Arabia, Russia, all those guys, they came together and they've been trying to agree to a specific amount of output, and that would help stabilize prices essentially. So they say, hey, as long as we're not dumping too much oil, because everybody now, this has been happening since 2014 and the United States shale revolution. So keep United States companies in mind here now. Oil is pretty easy to get right now. There's a lot more oil than we have definitely had in any time in the past. So it would be very easy for oil price to go down if everybody would just dump oil. So they have all agreed to stabilize their output to control prices, basic supply and demand here. But now what's happening, and this is where we even look at politics, that this is, again, considering the situation, this is usually what you see once situations start to deteriorate, globally, and what we see right now with the virus and what it's doing to economies. Countries are going to start acting and thinking from themselves, or now it's saying, or pretty much the decisions that they make, they go with one that would hurt the less. So now, fast forward till this weekend, and even what we saw on Friday, Russia did not want to agree to a output cut, meaning they want to pretty much produce as much oil as they can and dump it, and they want to take advantage. And essentially, I'm assuming that means they need the money. That's why it would hurt them less than if they agreed to stabilize prices. So this is where the situation came from now, because Russia said they didn't want to cut oil anymore, and that was pretty much insinuating they want to dump on the market or now start pumping as freely as they are. But now Saudi Arabia Well, they pretty much said, well, if you're not going to cut oil, then we're not going to play with this game. And they went straight to people, and they're pretty much saying they're cutting down. They're giving a $10 discount on Brent crude, which is insanity. And now it's pretty much going to be a race to the bottom, because now they're saying, well, it's a free-for-all. If you make a lot of money from oil, a lot of countries, even Russia and even the Saudis, they don't make any money at below $40 a barrel. However, their plan is we need to sell as much as we can, get this money as we need it. But it's not only a demand for the money that they need, but this is also very strategic, because this is where the United States comes in. They could squeeze out a lot of these oil companies. So it's pretty much, hey, you take a loss. And this is what happened in 2014. So this effect, we're going to see it tomorrow, but this is going to last at least 6 months, because if they're going to keep pumping, the idea is you pump for 6 months to a year, you sell below the price, and you're pretty much dumping on the market. You're making money, you're making less, even if it's below your budget for your government. The point is, 6 months, a year from now, you're going to squeeze out all these other companies, and hopefully they go bankrupt. So then 12 months from now, you have to deal with a lot less competition. So now you pretty much have a battle between Russia and Saudi Arabia, but now it also is going after the U.S. oil market. And now this is where I'm saying, watch out for bonds. I have a play with this. This is tied to a video I made a long time ago, and this is worst case scenario. It starts affecting high yield credit, because now the CLO market, it's pretty much energy. So if you see energy companies default now, we're probably going to see something blow up in high yield. But then it's also going to add a lot of pressure to U.S. oil companies. So that's what we have to watch. But now this is the situation. And now in the grand scheme of global economics, it's going to mess up currencies. It's going to change budgets, and it's going to put a lot of industries at risk now. And it's a lot of deflationary pressure, because it's not inflation. The oil price is going down. Yeah, maybe cheaper for consumers. However, on the macro scale, it's deflation of a currency. So some currency is going to get strong. What's that going to do to everything else? And now mix that in with the coronavirus. It's literally the worst possible thing that could have happened. It would have been bad if oil just dropped naturally because of demand, but now you're going to see the market flooded by some of the top oil producers. And then when one person starts pumping, the next person starts pumping, and it's a race to the bottom. It's almost as bad as a currency war. So this is going to be interesting to watch. But now, this is what I was saying over the weekend. This is enough for a rate cut, but watch Fed futures this week to see if that implies more. But this is that bad. We got the China economic data. It wasn't too bad. However, over the weekend, China posted their first trade deficit in a long time, which essentially means China has bought more than they sold from the world, which is usually the reverse. Everything's made in China. So that means China has been buying more money, but they haven't been selling much. Last time that happened was a few years ago in 2018, when we saw some of the stuff go down. But overall in history, it hasn't happened more than 10, 15 times, or at least in the last 20 years. So it's pretty bad. So it wasn't too big of a miss. However, that's something to keep an eye on. But I think now with what's happening in the oil markets, that will be enough to warrant this next rate cut in a week. And then we need to see what people are saying now for the April meeting and anything besides that, or if this situation with oil gets bad enough, that might even price in more rate cuts, which will tell us a lot more about what's happening. So now the next thing, TLT. If you guys don't know, that move, we killed it. We made that play. It was $500 into $40,000. We had the other plays. We walked away pretty good. However, you guys got to keep this in mind. This was one of the biggest moves historically on TLT, because this was one of the biggest historical bond moves. In the last 14 days, that move we ended up seeing, that was the cherry on top. That was the biggest move in bonds in 14 days in history. The world has never seen anything like this. That is important. Again, we made all that money on August. Just take a look. Think about how well we did on August, and look at this. This is nothing. This is a lot bigger than this. This makes August look like nothing. So it's kind of crazy to think about, but you have to keep that in mind. It outpaced the market, and that was that first divergence I mentioned. That's why the markets still haven't necessarily caught up to it, but they did come down a little bit. But you're seeing in general, this was a big divergence. If I showed you the bond chart, the S&P is lagging behind a lot. So that being said, watch out to see if the market converges, meaning the market could still come down, but doesn't necessarily mean TLT has to shoot up yet, because it's already moved up so much. But the diversion gets worse, and you see more people piling the bonds, and that could happen here because of this oil situation. And that's why I'm saying watch high yield credit, because now if you have a lot of high yield credit debt, you see what's happened with the oil markets make up 50-60% of all high yield credit. People are going to dump that, and then they're going to rush into high quality credit or high quality fixed income, the government bonds. So we will see what happens with there. But even this move, I'm saying something could blow up with oil and what that could create on the underlying, but this is kind of saying something. I don't want to jump to conclusions. However, seeing this big of a move, and when you see money exit, just like I explained with that high yield credit there in oil, when a lot of money goes out of one area and rushes into bonds like that, and then even the spreads of the bonds, it's looking like somebody got blown out, meaning somebody might have failed over this last week, or this is the precipitation to somebody failing, whether it's in oil, whether it's a bank, a market maker, a big liquidity provider. This is not good. So doesn't mean we're going to see the results instantly. That's what I'm saying. Who knows what's going to happen tomorrow? Even moving forward now, I would watch out for TLT and how I'm even planning to play TLT in the rest of this move. We don't know when the bottom is, but when it does kind of bottom out or set a level, it's going to make a bounce. But the key is if it doesn't bounce back up to this first Wuhan zone and doesn't get back up there, it's going to be bad. But I wouldn't be surprised to see a quick bottom out, maybe before or after the Fed makes a move, market holds up, and then give it about 6 months or even 3 months, anywhere from June to October. That's when we could see the next big downturn. So we have to be smart with how we're playing stuff. That is one theory I have in mind, and I'm going to keep my eyes out for. So I encourage you guys to be responsive to stuff, but at the same time, don't be too impatient. And you have seen how powerful getting time on a lot of these contracts have been, and it's really, really benefited us. So that, utilizing the ghetto spread, that is how we're going to watch out. That's how we're going to be playing for. But now watch out. The 50-year, the 100-year bond announcement, that could crash TLT. So what is that? This is what I've seen every single time bonds have actually made this low of a move. Secretary Mnuchin's came out and he said they've been talking about a 100-year bond introduction, and that could definitely happen. And if they offer that, why would that drop TLT? Because they're going to offer the 30 years, the longest bond that's available. If they offer a longer bond, it's going to lead you to extrapolate rates, and that could naturally actually bring up the shorter end of the curve, essentially, because now 30 years is the long end. But if they introduced a 100-year, it will still be on the long end, but it'll be shorter duration. People will extrapolate rates, and that could actually add negative pressure on TLT or positive pressure, bringing rates up on the bonds or the yields. Excuse me, some of you guys get a bond rates, the yield prices. If you speak Chinese, you know what I'm saying. And if not, ask some questions. It'll make sense. Don't worry. Come on, straight. We love you. But this is just a lot of different stuff happening, and I would watch out for TLT. We got to be smart. We've already got the ghetto spread. I have not touched the June or July ones, or the May or the June ones, but the other ones we ghetto spread the IWM, and now I have the other plays. But as you guys are seeing, this is really about to get macroeconomical, and I'm really excited. This will be my forte. However, it's not going to change the timing of everything, but I'm pretty sure our catalyst moving forward here, even throughout the middle of the year, it's going to rely on a lot of this data. So I'm excited for it. However, I will say I don't know what's happening. This is something, knowing everything I know, I could connect some dots. I know a lot of this stuff, but at the end of the day, this is I think a stark realization that a lot of people are hitting is you don't know what's going to happen next. I mean, I couldn't have predicted this thing with oil and OPEC. I knew something bad could have happened to warrant the rate cuts, but it's starting to get that point where you really can't see too far ahead. And that is reflected in equity prices and bonds, that uncertainty, we're reaching a level we haven't really seen in a long time. And again, last time this happened with oil, it was 2014. It created a big fallout. So just get ready and be nimble, man. Be nimble. But let us get into the plays. So right off the bat, let me tell you guys this. I have a few plays that we made. I told you guys about USO and EWI. In Italy, that's a decent one. USO is probably going to be too late tomorrow. I'm mad I didn't grab those plays. However, there will be ways we could probably get in on it short term that I'm going to talk about. But with everything, I know we've done good lately. There's been a lot of plays, but let me tell you this. Do not copy any of this stuff on stream. I'm just showing you what I'm doing. If you choose to copy it, that is your decision, and please be smart. And if you don't understand this, some people are doing the ghetto spreads or selling premium without understanding it, doing the wrong ones. Telling you, especially if the markets move big and you make a mistake like that, you will get blown out. So please, 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 paper trade. Understand, I'm documenting this journey. I want to document everything that's happening, so I have record of this, and you've seen why, especially with what's going on. So please, I'm just trying to again, lose almost thank you for that. But be smart, you guys. Don't be dumb. Don't blindly follow this. I'm not telling anybody to buy these stocks. You will lose money if you copy me without any knowledge or any idea of how to execute this stuff. This is risky. Do not get it twisted. We are not framing it any other way. You want to learn. You have the opportunity here. Not saying you can't use this information to profit you. However, if you are just blindly copying or don't even understand a lot of what we're talking about, don't let FOMO bite you in the ass. It could end up costing you a lot of money. So please, I really want you guys to be smart here, because now, especially too, we had a big week. I'm going to be playing with a lot of house money. However, I do plan to keep it, but I need to start setting things up. And you guys have seen over this last few weeks how timing and pressure, and you guys are getting into stuff you don't know, could lead to negative stuff. So keep that in mind. However, getting to the plays, I'm going to be watching USO, but the next thing I'm going to be playing is SCO. So this is like the UVXY for oil, but it has a lot of liquidity. It has a lot of illiquidity, and it's harder to play. But I'm going to look for this for short term. I'm going to keep my eye on that one. They're pretty decent. However, the other play I made, I grabbed this yesterday, and this was my oil play. I said it on stream. I ended up playing emerging markets. Now, I didn't like this one as much, but one thing that's related is China and emerging markets and how it relates to oil. There is a big relationship. So even Uncle Answers has talked about that. If any of you are familiar, but this is a very clear one. So this was my way. The oil premium, I didn't know what was going to happen on Friday with oil. I saw it at that level. So I played kind of a double whammy play where it's connected to oil, but it won't necessarily move directly, but it could still also be negative, and it was EEM. And I made a pretty decent sized trade with this one. I went for April 17th EEM. So again, I wanted more time, but with the nature of oil, I said I could go with the April. May and June are what I'm preferring in this marketplace. Think about the timeline I listed earlier. So I got these EEM puts. I got the $35 puts, and I bought 50 of these at 49 cents. So they were kind of all over the place depending on how it moved, but why did I get them? And this is a key to note. Look at the premium. The fact was, they were trading at 22 cents. The day before, I paid 49. I only paid 100% premium. The other day on Friday, they were up at 60, even clipped 90 or $1. So they had some upside. It had the volatility. The insurance got expensive as it bounced. The house was still on fire. It got cheap. I made sure I didn't pay more than 100% premium at peak volatility. So that is why I like this one, and it was still within about 2 standard deviations. Now, only thing I didn't like, it was April, and the price was a little high, but I spent $2,500 on that trade. So if it goes up tomorrow a lot, I wouldn't get into it. I would wait on that, and this is what I'm doing with all these plays, even TLT. You just wait for this to happen. Again, it's riding the waves. You let this get expensive, you may miss the first run-up, but wait till it comes down, and we use these tricks to get back into them and look at the pricing. And then if I could get to May or June, those are going to be the most prime plays. So if you didn't get in anything and you feel like you're getting FOMO, you have nothing to worry about. The markets are going crazy here, and this isn't going to go away for anywhere for 3 to 6 months given what's happening with oil. So that was the first play. That was the main one that I got. I'm going to be holding that. Of course, we're going to be playing TLT, but besides that, I'm going to look to flip short-term SCOs. I can't give you a specific price or date on this. It will probably be short term. However, short term will be at least March 20th. But the main thing that I'm looking out for is the prices. I need to see the prices that these open up at. So the oil is going to have a crazy premium because this will be day one of it happening. So think about what I just showed you with the EM. If we can't get an oil play, we're going to let it rise up, let it do its thing, and then on the bounce, then we're going to come back into it, or I'm going to see what we could scale into small. So there's that. And then finally, the last play with what I just told you, HYG. So you guys remember HYG. This is high yield credit. It didn't make the same move as oil because there's a big difference like I explained. But like I said with TLT and the bond, government bonds, TLT went up because the government bond, the yields went down as demand increased. A lot. People were rushing into those. They didn't necessarily do the same with high yield credit. But what's going to happen, this thing's probably going to get blown up here as the oil situation gets hit. So I want to look at these prices because we're already holding them, and that's what sucks. We already know the prices are pretty high. So I have those Mays. They're already up 500%, 190 into $1,000. I'm still holding these. We already sold half. We made those free a long time ago. But this could be a secondary play to play it, and this is what I think could really, really bring some things down. But this one might take a little bit longer to develop, and this might be a cheaper way to play oil. Again, we have to see the premium. So watch that. I made an AMD play, same logic as some of those other plays, but you look compared to yesterday, they didn't drop a lot. They kind of had a gap up. They had some news. They're holding up. So the premiums weren't that bad. So I grabbed May plays on Friday, spent like $200. I got May $26 puts. All right, that was the wrong ticker. There it is. We got the May $26 puts. I got 5 of these at 42 cents. They went up a little bit, but again, compared to Friday, they were when they had peak volatility, it was still below. They were going for 60 cents. We got them pretty much the same price at 40 the day before, but even look what were they trading at prior to that, 24 cents. We paid about 100% premium. So I don't like paying a premium on anything, but as you're seeing, 100, 150% of the peak volatility. If you're only paying that much premium, you could see us kind of adjusting to what the situation's giving us, but I like the time on that. So I grabbed those, and then another play that I liked, same criteria. So I took a lot of profits. We took over $50,000, $60,000 in profits on Friday. So I did put some out. I put that $2,000 on the EEM because of, granted what was happening, but all these plays, I kept it small, but I was looking for the lagger. So again, if we were going to see a broader move, you could even tell like Walmart's actually holding up. Whereas if everything was going to follow each other, it would be down here back at that first level it hit. So there's meat on the bone. So I grabbed Walmart April's, and that was because, and this is what I'm telling you guys, some of the Mays are starting to get premium. So if I went to May, they were trading at 200-300%. But we got these Walmarts, grabbed 10 of these at 35 cents. The April 17th. Oh, no, it was the 70 puts. Got these at 35 cents. They held the same price, but comparing to the day before, they were at 10 cents. It was a little higher, but at the peak, it was pretty much paying the same volatility price. So these were a little bit expensive, and why I was willing to take that one was because, again, the May ones were just at, they were at all-time highs. So you could see compared to Friday, they were substantially more than before. So it was a little different, but I do like Walmart in general, just even that play with being a lagger and all of that. So watch them again, watch USO. We're going to see how we play that. Then I want to go after another lagger I could see is kind of booking. I want all the travel premiums to come down. So think about what I was just telling you, where it'll happen with oil premiums shoot up, and then it'll kind of calm down a little bit while the house is still on fire. We need those to get cheap. It's just going to get hard to fill on booking. We still have the HD, and I ghetto spreaded those along with the Starbucks. I still have those old McDonald's. Actually, I think I ghetto spreaded those as well too. And that's what I've been doing in a lot of this. If I want to take profits, if we're still in volatility and the premiums are high, the ghetto spread is literally the best, because you could ghetto spread for 1,000% profit, get all of the money, and still leave yourself upside if anything went crazy. So we did that, and then now another secondary play. I should make another video on this. I have a crazy theory. Bear with me here. I've been dropping a lot of bombs on you, but this is my next thing I'm going to be going for. It's going to be UNH and Cardinal Health, or even then I want to do more research, because this play is going to take time. This could be the next big short play. It's going to be healthcare and insurance companies. Pretty much, one, I think the healthcare system, if this does progress at the exponential rate, we could get that system overloaded and we could see some issues there. But I want to go after insurers. This is the same thing that happened in the mortgage crisis. I want to find the insurers that do anything healthcare related, but then I also want to look for insurers for workers' compensation and anything of that nature. People have talked to me, if you get sick and you have to spend 14 days, you're going to get short-term disability. Some people do get that, short-term workers' comp, something along those lines. But what I'm really seeing with healthcare, both health insurance and then insurance like that, this is what happened in 2008 with the people who were insuring the mortgages. Most insurance companies, they're pricing in a 30% failure rate. Nobody can account for 75, 50%, 100% of everybody getting something. So if that's what happened here in the healthcare situation, where now you have 50% of the United States getting short-term workers, or 50% claims, even anything above that from all over the nation, or now 100% of all of America filing these big insurance claims, those guys are at risk now. Again, mix this in with the high yield credit and what's going on with oil and everything else. This is why it's kind of a perfect storm, but that's a little bit far out there of a theory. However, that is one of those big risks I'm keeping in mind, because if that blows off, I think that is just something a lot of people haven't thought about. So I'm going to actually watch UNH and some of these healthcares, especially the people who own the hospitals, the people related to insurance. And then lastly, Tesla. I grabbed a crazy play on there. I forgot. It was like a $100, $140 put for like August, but that's when I want to see if the spreads come down, just because they blew up a lot because of the profit of China and everything going on there. I usually don't like to play Tesla, but take a look at, what's lagging. I mean, even though they kind of came back down to a zone, they still have a lot of meat on the bone. So I'm gonna keep. I want a lot of time, because even then the extrinsic value, once Tesla starts moving, it's just raising up the premium prices. So we might be able to flip it there and make it free. And then finally, TLT. I'm gonna be holding the May and the June still. However, like I told you, I want to see how the market reacts, the fact that this was such a historic move, it has to come down a little bit or it might lag behind. So I do still want to play the Fed meeting. I still think we're going to get a rate cut, and I still think that's going to create something. However, now I'm probably going to be more prone to wanting to ghetto spread because I was still able to ghetto spread and get so much money on the other play. If I could take another $20,000, $30,000 and still have upside, it's looking like a beautiful play there. So got that. And then finally, I am going to be looking at Baba and Baidu, mainly Baba. We sold out of those plays. I want to check the premium, but they're holding up pretty good, especially on the 100-day. It just looks like they're not really moving, but oil in China, there's a very big correlation, and once one kind of goes, I like to go for the other one, or I could at least see the other one going in 4 to 5 months. So this is going to be a lot of timing, a lot of patience. I mean, there's a lot going on. Hopefully you see I'm not panicking. I'm not going crazy. We have a lot of plays. It's all how you move. So if you let fear get the best of you, if you get your greed and you say, oh no, this has to happen. No, remember, it's a boat crash. So it's going to take a lot of time. You have to be focused on the timing. If you go try to get too quick, get too short term, I know you think this is going to happen. You read these articles, but the market doesn't have to do what you think, and that's something I'm key. Like I said earlier, I have no idea what's about to happen, so I'm removing all my expectations. We're just going to execute like we kept doing, keep our head in the game, keep the armor on, and that's pretty much it, baby. So that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. Keep the helmet on. Like I said, you need to keep your head in the game. Be smart. Make sure you take profits. Utilize the ghetto spread, and remember, there's opportunities. If you think this is only going to last 1 week, 1 month, don't listen to the FOMO demon. Don't blow up now when you're about to see one of the craziest years in history. So I need your head in the game. Be smart. Let's go. Brush off anything. Wins or losses last week. We in the game, baby. The code loves you. I love you. I'm going to see you in the morning. Let's go.